Welcome to the Brightwell podcast. My name is Tony Capucille, CEO and founder. I'm here with Trey, Raymer, my partner and the CFO.
Yeah, great to be here.
Yeah. We're back again for another episode of this podcast. And honestly, this topic's one I'm really excited about. And it's quarterly taxes. It's kind of weird to be excited about quarterly taxes, Trey. I don't know.
I know
is that a topic most people are excited about?
No, but I think at the end of this, they will be.
Yeah, I think that's it. So quarterly taxes, it's a common problem that a high net worth earners have to pay, right? And those taxes are going to come like kind of, I was going to say like death and taxes, but that's one of these things. But it comes on a quarterly basis. You're going to have it in April 15th, June 15th, September 15th, and then January 15th. And it's going to be like clockwork. Trey, to kind of set this up, who pays quarterly taxes?
Yeah, so our tax system is set up to be as a pay-as-you-go system. So many people, have those things withheld from their paychecks, from their employers. But many other people are self-employed or have their own businesses in which they need to pay quarterly estimated taxes to the government. And that's required. If you don't do it, you have to pay a penalty. Those things come, and if you don't make them, you got a problem.
Yeah, so it's pretty simple. Self-employed, own your business, maybe passive income.
Mm-hmm. Yeah.
Anyone that's receiving income that's not being withheld through some sort of W-2, you're going to run into this. And obviously, Trey made a point. These are going to come up, and they're going to come up 4 times a year. If you don't make those payments, you could defer those, but it just creates penalties. So most people do hit those quarterly tax deadlines. So let's kind of frame how does, and it's funny, we're talking to people with quarterly taxes, but let's just kind of frame this up really quickly. How do you get the basis for what you're paying in a given year when you don't necessarily know how much income you're going to make?
Yeah, you're going to have to figure out kind of what's my estimated amount of income for the year, what are my deductions going to be, my tax credits, and you have to estimate that. There's worksheets that can kind of help you pull that together. You can look at the prior year, what you paid, and kind of apply that to the current year, any changes to the tax code and changes to your situation, and then you do the best you can to estimate that.
So you essentially, and I believe there's 90%, 110% based off of how you're kind of positioning yourself. Talk about that real quick.
Yeah, that's right. So you can look at what you paid in the prior year, or you can estimate, at 100% of that, or at a certain level, 110%. Or you can look at kind of what your estimate is for the year and try to hit at least 90% of that.
Okay, so if I paid $400,000 last year, I've got 4 $100,000 payments I'm going to have to hit. But along the way, obviously things can change. If I'm making more income, then I'm going to work with my CPA. And most folks that have this situation have a CPA that's kind of helping them guide that plane and land it in. So if I'm making a lot of money this year, I'm kind of showing where my earnings are. My CPA might say bump that 100 to 140 this quarter.
Absolutely. So every quarter you can adjust that. So if you estimated too low in the first quarter, you can make up for that in the second quarter or vice versa.
And you're trying to get to around 90% if you're making more than.
Yeah.
Okay, so it's a pretty simple process. But if you back up and just think about it, if you're somebody that's paying quarterly taxes, I know that these 4 dates are not like the most fun. It's almost like when you're having taxes withheld on a W-2 paycheck, you don't feel the pain quite as much.
That's right.
But when you have to like take that checkbook out, or I guess people aren't using checkbooks as much anymore, and write U.S. Treasury, right, and just press send, I think you kind of evoke a different sense of pain of the taxes.
Absolutely. Yeah, it's not passive to you. You got to make that active step to make that check 4 times a year.
Yeah, and so at Brightwell, one of our biggest things is agency and taxes. And so we actually try to help folks think about that pain and turn it into pleasure and redirect that tax dollar. And so let's talk about this, though, before I get into how Brightwell can impact that. If I have that $400,000 in tax liability that I'm going to have to pay in April, my first payment's coming up, but I make a big purchase, or I have some sort of tax strategy, or maybe my income's lower than, I can adjust my payment accordingly. And there's a kind of safe harbor method around this. Can you talk a little bit about how I might be able to bring my payment number down?
Yeah, absolutely. So you're able to plan out and forecast what your tax liability is going to be for the year. So you can look at what strategies you apply and take those into consideration on each of those payments and dates. And so that's where Brightwell can really come in and help out. I know we'll get to that here.
And even without Brightwell, if I'm running a construction business and I want to buy some more truck equipment, fleet, machinery, something like that, that might increase my in-year depreciation. And that's going to affect how much I'm going to owe in taxes.
It does, yeah.
So as a self-employed business or passive, you're always thinking with your CPA and planning about how big that check needs to be. And I'm not saying you always try to mitigate it, but there's a lot of strategies that people put in to mitigating that check to as low as is rationally possible, right? And so, all right, Now, how do we talk about Brightwell associated with this? Well, Brightwell, as everyone knows, or kind of to reframe, we look at folks with tax liability. Typically, we're looking with someone that pays $250 or more annual in taxes. So that person that's paying $100,000 a year is perfect. $100,000 a quarter is perfect target for a Brightwell project. And so whenever someone's paying that, we can step in that scenario and say, hey, while you're getting ready to write down U.S. Treasury on that check, April 15th, pause. Like our big strategy is you now have agency of where you put that dollar with a Brightwell strategy. To talk a little bit about like how Brightwell can change that payment date.
Yeah, absolutely. So with Brightwell, we're able to take tax liability that you have for the year, and we can do it with either active or passive through the strategy.
And that's huge.
That's huge, yeah.
So while most people that are, I don't know, actually, if you're paying quarterly taxes, you can easily be active or passive.
Yes.
And so oftentimes you're active, you don't really have as many strategies. Passive have maybe a few more strategies, but this can work for either. So keep going. So they have that tax liability. Go ahead.
Yeah, that's right. They have the tax liability, so we're able to work with you and find projects that kind of fit what you're looking for, not only just the organization, but the size of it, what kind of tax benefits that come from that, the tax credits, the accelerated depreciation, which is now 100% bonus depreciation. So we can work with you and find what your tax liability is expected to be and what projects can mitigate that. And so we've got a lot of inventory of items that can be, fit exactly what you need.
All right. So let's just use this person that has that $400,000 tax payment. They're starting off the year. Last year 2025 was great. 2026 is coming up. They think it's going to be substantially similar. Maybe they even are going to increase their revenue in their business. And so they're going to already be safe harboring adjustment with their CPA. But they know they're going to be paying that $100,000 a quarter. So they would we'd say, hey, let's stop before you make that first payment. Let's actually, December, January, February, it's a great time to look at a Brightwell project. I think it's one of the best times because all 4 of your tax payments are in front of you, right?
That's right.
And so one of the great things about this is Brightwell is a heavily tax incentive vehicle, an investment vehicle. In fact, 60 to up to 80% of the actual project can be paid for by your taxes. That's a pretty substantial thing. So if we're in the situation where someone owes $400,000, we might stop and say, look, this $600,000 Brightwell project looks pretty attractive. Well, at $600,000, it qualifies for, let's say, 67% tax credits. Talk about why that's going to matter for this person paying quarterly, Trey.
Effectively matters. It especially matters when you're looking at this first quarter when we're coming up to a year, because if we're able to kind of get you into a project at that point, we're likely to have that project completely installed and finished by the end of the year, which means you're going to get all those benefits for for this tax year that we're talking about in that scenario. And so it's very powerful at the beginning of the year because then you're able to apply that towards your initial estimated tax payment on April 15th. And then your next one on June 15th, and so on and so forth. So you hit it up front, you're able to take all of the benefits of that during the course of the year and feel confident that project's actually going to get installed by the end of the year.
So as I was playing through that scenario, the reason I used 600 and 400, because we used that person that had $100,000 a quarter they owed. And so, okay, I get a $600,000 food bank. This is going to be really cool. I need to buy a $600,000 food bank. And it feels like you're going to have to take $600,000 out of your pocket or $600,000 loan. But you don't ever think I can actually use my quarterly tax payment, because honestly, those are different pockets. When I'm thinking about making an investment, I'm thinking about pulling from a dollar set aside for investment. When I look at those tax dollars on April 15th, I never think, hey, I wonder if I can invest this dollar in a food bank.
That's right. That's a lost dollar to you.
It's a sunk cost. And so this honestly is why we think anyone paying quarterlies has to stop and rethink what they're doing with a quarterly payment. Because Brightwell gives you an opportunity to literally pick a food bank, a church, a school, a zoo, whatever you think you're passionate about, and have agency on where that check goes. And as our team says internally, you can write U.S. Treasury on April 15th on that check for $100,000, put it in the envelope or get online, make that payment, and send it in, and just feel that feeling. I mean, I'm sitting in it right now. It's not a great feeling to write $100,000 out the door. Or you can change that and write Brightwell. You can write Brightwell on that check and redirect that to the organization of your choice. And so if I'm buying a $600,000 project and I know I have $400,000 that I'm going to have to pay to the U.S. Treasury, if we plan it in Q1, we just redeemed all of those dates.
We did. Yep.
I mean, all of those $100,000, because you're going to then safe harbor with your CPA and say, hey, I'm actually doing this solar project and I'm actually buying this food bank. And so you don't have to come up with 600 because you have 400, and we do all the work with you to establish how much your project qualifies for. And we actually size them to try to maximize so that every single one of your quarterly tax dollars can go directly to the project. So now you literally just get to use the cash that you're setting aside, maybe in a bank account, a savings account, or paying quarterly on the way out, and redirect that one plus the other 200 from because you do have to finish off that $600,000 project. But man, it's weird to think about you could buy a $600,000 solar project with using money that you never could access before.
That's right. I mean, think about things that you care about, whether it's a food bank or a church or a school, charity, nonprofit, something that you can tangibly feel and be able to direct your money towards that thing. See the benefits that provides that organization, be part of the ribbon cutting. There's just so much benefit that comes from that versus writing that check to the black hole of the US government.
Yeah, and then you also don't have to wait because sometimes, which is great, by the way, Brightwell will also allow you, if you have your taxes withheld, you can do a project and you get that check back. So even if you're in the category of getting your money withheld, don't worry, you can do it, but you just have to wait for like 12, 18 months whenever you file your taxes. So if we do a project in 26, you're going to get your refund in 27, kind of classically. But if you're using quarterlies, there's no waiting. You're literally using your in your cash. And that's what I think people don't fully understand until they sit down with us. And this actually didn't even come from us. While it seems like an obvious strategy, I want to give you kind of walk through what happened with one of the doctors that we had worked with. They had a $3 million quarterly tax liability, which is a good job, big tax liability. Yep. It means you're making a good amount of revenue, but that honestly, even though it's a high class problem, it still feels hard to write a $3 million check to the U.S. Treasury. And so in that situation, he looked at us and we said, hey, you can pick a project. And he picked a food bank, a very large food bank, in fact, one of the largest in the country. And that one quarterly check got him $1.1 million into a $1.5 million project. He got to buy a $1.5 million solar array, and he didn't feel any pain. When you think about writing a check, even if it's an investment or something you really care a lot about, you're still like, oh, I'm seeing that cash going out. But when you take the tax checkbook out, he didn't feel any pain. In fact, what do you think his question was whenever he had $3 million and he got to write 1.1? What do you think his question was?
Where can I do more of these?
Yeah, are there more? I need more right now. Not man, that's tough. Let's wait to see how it goes. I would like to write the rest of this $1.9 million and pick something else I care about. Now, at that point, we didn't have any other projects left. But yeah, it's a cool thought process.
It is just the agency that gives you. I found that to be one of the most compelling and exciting things about working with our impact investment.
So you said agency. We always say there's three main reasons to do a Brightwell project. And I'm not going to put them in a particular order, but Trey said agency, which is just like you take control, maybe for the first time, of where your quarterly tax payment goes. And we think by and large, that's a cool thing. Even if it didn't stop there, like I just got to point to where it gets to go. Second, naturally, Brightwell projects make an impact because whether it's the food bank, the zoo, the school, those dollars you're putting into their solar project are going to naturally drop their cost of energy and put more money back to a kids program, more folks they're going to feed. So the first two things is you're going to have agency and you're going to be able to make an impact. The third is we're also going to turn it into a return. So there's a lot of returns. There's short-term returns where you make most of your money back up front. And there's medium-term, like 6 to 10-year returns that you're going to be making your money back over a 10-year agreement. And then we also have up to like 20-year returns. So if you kind of want to create an income stream on a quarterly basis for you or your family, turn a tax liability into an ongoing income stream that you can have or your family can have or you could donate eventually. I mean, it's
an annuity for you that you created for yourself.
Yeah, you've created an annuity for yourself. So, yeah, I mean, fundamentally, we really want people that pay quarterly taxes to stop and to say, hey, do I want to pay my April 26th tax payment. And we think timing matters here, and Trey mentioned it a second ago. If you make a decision in January or February, like what people don't understand, if you buy $1 million, $1.5 million solar project, these projects take time. Mm-hmm. I mean, if I were to buy a project today, I've got a permit, I've got an engineer. It's a $1 million construction project, and then I've got to get it on the property, procure the materials, install it, and I've got to place it in service. So Trey, how long could that possibly take?
Yeah, I mean, that typically from the start, when you sign to when we're installed, that could be somewhere 4 to 6 months. You get finally interconnected, could be another month or two. But you've got to step back and think about there's much larger solar projects that we don't do that are multiple years in duration. We're not in that game. We're in the distributed generation rooftop solar, and we can do it. We have that sweet spot for us that can be done in 4 to 6 month time frame. And so it's really important to kind of get that identified early in the year so that you get all the benefits during that year.
Yeah, I would say the optimal time to buy a solar project is January, February, March, April. Mm-hmm. And I'll sneak into May and June as well, but the reason I love doing it on this side, especially those of you that are listening on quarterlies right now, is if I paid quarterlies and I knew about Brightwell, I would never pay quarterlies again. So if you make your decision early in the year, A, you have no risk on install, right?
That's right.
And B, you don't ever have to feel the pain of pulling out your tax book check and writing the U.S. Treasury. You can write Brightwell and know that it's going to somewhere that you really, really care about.
That's right.
And then the last thing I would say is if you miss April 15th, still do a project in May or June. We can still get a project installed by the end of the year, but it's a planning thing. Well, taxes might be in your mind October 15th or end of year for donations. Reawaken that tax thinking in Q1, and then let's get ahead of your quarterly payment. And we'd love to serve you in this. And I think you're going to find it's not only fun, it's probably one of the most rewarding experiences that you can partake in. So, Trey, thanks for kind of walking through why no one should ever pay a quarterly check to the U.S. Treasury again.
Never again.
Never again.